There's an unemployment disaster in the US right now. The worst jobs report since 2010 just dropped yesterday, and almost nobody is telling you the truth about it. And Wall Street is shouting that it's just a temporary blip caused by bad weather and healthcare strikes, that we should just shut up and buy the dip. That is what they want you to believe, but the data suggests that we're walking straight into a stagflation trap because the labor market is already dying and inflation is rising. My name's Nick. I've been a professional investor and unprofessional trader for 24 years. Today we need to talk about exactly why the economy is shrinking while prices stay high and why the Fed is completely trapped. Let's figure this out together. But before we start, I'm not a financial advisor. This is not an inducement to buy or sell any assets. And most importantly, do not take financial advice from some random dude on YouTube. Let's get into it. So the February jobs report just came out and the media is desperately trying to spin it. They're trying to tell you that the economy is still fundamentally strong. They say that the job losses are due to winter storms and some nurse strikes, right? They push out this narrative throughout the media so retail believes it and keeps on buying the dip on the stock market. But the catch is that the smart money has already looked at the internal numbers and started dumping, allegedly. And the reality is that this goes way deeper than bad weather. For all of 2025, the labor market was basically a one-legged stool held up entirely by healthcare hiring. Now the stool has been kicked out. Healthcare actually lost 28,000 jobs in February. The US economy was expected to gain 50,000 jobs in February. Instead, it lost 92,000 jobs. But here is the bigger problem. That means that 2 of the last 3 months were negative. That is the worst period for the job market since 2010. The 3-month average for job gains has essentially flatlined to less than 6,000 per month for the whole of the United States. That is a disaster. We have been in a no hire, no fire labor market for a while. Now the no hire part is completely stalling out and the firing part is starting. But it gets worse. Normally when an economy loses jobs, demands fall and prices go down. But the average hourly wages have grown by 3.8% year over year, which is hotter than expected. And that sounds good, but it's actually bad. I'll explain why in a second. So at the exact same time, US economic growth crashed. So GDP rose at just 1.4%, missing its 2.8% forecast by a mile, by 50%. So economic growth is shrinking, jobs are disappearing, but wages and prices are still climbing. When wages go up, inflation climbs, prices climb. That's very bad. This is the textbook definition of stagflation, and this brings us to the vultures on Wall Street and the Federal Reserve. The Fed is completely trapped right now. They cannot cut interest rates because inflation is still too hot, especially with oil surging past $90 a barrel, thanks to the war in the Middle East. But they cannot raise rates either because the labor market is bleeding out. So what happens? The market completely panics. Expectations for rate cuts got pushed back all the way to July. And while retail traders were left holding the bag on overvalued equities, the manipulators have been moving into hard assets. That is exactly why both gold and silver shot up the second that job report dropped. Gold jumped to over 5,100 an ounce after dumping earlier in the week. Boom. When the report came out, it surged. Silver also surged. Institutions like JP Morgan know exactly how this stagflation game is played. They know that inflation is on the rise again. And what is the only asset without counterparty risk? Gold. It makes no promises, it pays no interest, it doesn't care about political decisions, right? It just exists, it's just gold, right? And a lot of it exists in JP Morgan's vaults. They are one of the biggest holders. They don't really talk about that much, but they are. So they are screaming, buy the stock market dip to their customers while hoarding gold. That makes a lot of sense, right? And the bullion banks know that a trapped Fed is historically incredibly bullish for precious metals. So they accumulate physical metal while telling retail that the economy is perfectly fine, allegedly. It's a system designed to suck you dry. The biggest challenge for your money moving forward is surviving this transition from an inflation narrative to a stagflation reality. If corporate earnings start reflecting this job slowdown, the stock market could easily face a massive 10 to 15% correction or larger. This is historically based. It's not a prediction from me. It's not financial advice. Me personally, my rules are the exact same as they've always been. I don't use leverage. I don't buy paper versions of hard assets. I prefer physical over paper. I really hate paper. This is the time when manipulators are the most active, during wars and during big crises. So it's always best to sit on your hands at times like this. Anyway, what do you guys think? Are we heading into a massive stagflation trap? Let me know in the comments below. I'll see you in the next one.